Oh, hey, we're live. Good to see you. Kind of winging it today. Where did the time fly? This day has flown by. Last night, Sunday night, we're like, oh, the futures are down 1,500 points on the Dow. Continuing last week's sell-off, and it was a brutal sell-off. We could go into it. You've heard everything there is to know about the sell-off last week. Let's talk about today. Today wasn't too bad. The S&P 500 rose a little bit. Nasdaq, maybe. How did the Nasdaq do today? Things have been changing so quickly. Believe it or not, I don't obsess. The S&P was actually down 11 points, down a fraction of a percent on the day. Nasdaq was up a fraction of a percent, and Dow is off a little bit less than 1%. So, yeah, Dow has lost what about 4,500 points just since the tariffs were announced. But between Monday and Tuesday, that I love say Thursday and Friday, I'm a little punchy right now. It's been a long ass day. All right, so what are we going to talk about today? Let's just roll a quick intro, and then we're going to talk about this. What's worse for you, a recession or a bear market? It depends on your stage of life, and people want to know what should I do now. And aside from the general, aside from the general uh, generic stuff, don't panic, think long term. I don't know if that's enough. I feel like people need something to do in order to take control. Some people are going to do really well by ignoring all this, leave their investments alone. But some people just have to tinker. They have to jump in here. They have to jump out there. And, you know, I want to make sure you're doing the right things. I'm not saying you shouldn't do anything, but I just want to make sure. Okay, so let's roll the intro, and then we'll talk about these important topics that I think will have much more bearing on your life long term than how the stock market's doing today. Okay, here we go. All right, we're back. Thanks for watching. While you're watching, if you don't mind, give me a thumbs up or a heart reaction, whatever is available to you in whatever channel you're watching. If you're watching on YouTube, please subscribe. I've been posting an awful lot about tariffs. I posted I posted a pretty lengthy post today, about 10 bullet points on LinkedIn. So if you follow me on LinkedIn, go check that out. It'll tell you all the reasons why I think tariffs suck and why I have very harsh things to say about the current tariff policy. Now, I want to just state, that I'm not like totally anti-tariff, but in the current form, the abruptness, the size, the magnitude, the way they were calculated, I'm against all of that. But if there's a country that abuses minorities or strips women of their rights or does something like that, yeah, tariffs are a good idea. One way to combat that. Countries that support terrorism, we should do much worse than just tariffs. There's all kinds of things to do. Tariffs are a tool in our toolkit. But when you over rely on tariffs because you're trying to force everybody else to change according to your own worldview, that's when I don't agree with tariffs. The tariffs were calculated in a weird way. And it means that if you just because a country has a deficit with us doesn't mean it's a tariff. If we import $200 billion worth of goods from a country and then we export that country $100 billion, 100 divided by 250. So Trump says that's a 50% tariff. We're buying more from them. So therefore the difference is a tariff. That's not what a tariff is. A tariff is a penalty. Let's say on everything coming into my country from a foreign country, I'm going to put, a 10% fee on it, or surcharge, whatever you want to call it, a fee. And you use that to placate your own constituents or to try to push another country into some form of behavior that you would like to see them do. But when you just decide to tariff the entire world where The U.S. is about, I think, 15 to 17% of global commerce. The other 85% of the world will travel and trade elsewhere. And I think what these tariffs are doing is it's going to create it's going to create new trading blocks between Canada and Europe, Mexico and Europe, Mexico and Canada, Taiwan, New Zealand, Australia, the rest of the developed world, the rest of the economies of the world will get together. And guess who they're going to leave out? Us. It used to be that no one would want to do anything without us. And now everyone's going to do everything without us. We've enjoyed huge benefits as Americans in terms of lower interest rates and a global currency than otherwise would have been. But we're literally giving that away. And I actually think if we took all these tariffs away and eliminated this whole tariff policy, it's too late. We can't be trusted. Not you and I, but our government as a trading partner cannot be trusted because they could take the tariffs away, put them back next week. China on Friday retaliated with a 34% tariff of their own. And Trump comes and says, well, now I'm going to go to another 50% tariff, just like that. Like, was that just like an anger management issue, or just you actually have something in mind? You see, I think people are not estimating correctly the threshold for pain that other countries have. Like China, that's a dictatorship. If you raise your tariffs on them and they raise tariffs on us, they could take a lot more pain. Their government won't suffer that much. It's their people that'll suffer. But our citizens do suffer. I don't think Trump realizes, or I think he overestimates our desire to suffer so he could get his tariff policy through. They're talking in general terms, the administration. Over the weekend, Scott Bessent, Treasury Secretary Bessent, said, no, Americans aren't really worried about the market and their retirement, about the stock market and retirement. Like, it's just a very tone-deaf response. President Trump playing golf late last week in Florida, and Peter Navarro is saying, no, this is all going to be good. Companies are going to come here. They're going to build here. They're going to do this, rah, rah, rah. But that's just hyperbole. These are like very broad phrases in terms of what you want. I don't think factories are built that quickly. And by the way, companies that are foreign that build here, why would they do it now? Because if the tariffs go away, then they'll have been left with like a very high cost factory. Why don't they wait? And if they do negotiate, okay, if a foreign country negotiates, let's say Vietnam, they still have a huge cost advantage. Huge cost advantage. So they came out and said, we'll do zero tariffs. And the administration said, no, that's not good enough. The European Union came out and said, I'll tell you what, you eliminate your tariffs, we'll eliminate ours, we'll have a zero tariff policy, transatlantic. The administration said no. So what do you really want? Well, you have to buy more goods from us. What goods? Everyone makes goods that they make that other places want or need. We want olive oil, we want wine. What are you talking about? This is why this doesn't work. So even Musk is going all out anti-tariffs, and he's Trump's biggest donor. I think he gave $300 million to President Trump's election campaign. So let me just show you a couple of the headlines here, okay? Let's take a look at this one. All right. GOP mega donor. So this is like a hardcore right. Some of you are going to think, oh, Mitch is being on the left or being on the right based on what I say in my, based on what I say in my live stream. But Ken Langone, latest billionaire to blast Trump's tariffs. It's not a double lines gun lock. It says S&P 500 could bottom at 4,500. And that's still a long way to go from here. All right. Beijing's strong counter tariffs raise the specter of an intense trade war. EU politicians urge calm after Trump tariffs dive the stock market earthquake. Okay. And might as well take a look. Wall Street economists are bracing for recession if full tariff threats take effect. UBS downgrades all U.S. machinery stocks, such as Caterpillar. It downgrades everything to a sell based on the tariff impact. And from what I could see over the weekend, the administration is digging in its heels based on what Navarro, Lutnick, Besant, and Trump all say. Uh, Now we're in a weakened position because Trump's negotiating power is in a weakened position because now he set himself up in a box where he actually needs other countries now to come and negotiate. And he's going to start like getting, beggy slash aggressive and say, come on, no, negotiate with me. Come on, let's negotiate. And other countries are not going to do it, or they're going to really slow walk it. Because now we're dependent on the good graces of other countries to negotiate with us, and they can't stand us, and they don't trust us. That's a real problem. All right, so that's the big picture view. It's a very negative view of the tariffs. I don't see how you could come out with a positive view. um, and I see it on my Facebook feed from friends like, oh, this is fair. These are reciprocal. What's wrong with being reciprocal? These are not reciprocal tariffs. The tariffs that you were given, the numbers were given, are fake numbers. These are not tariffs. Like we have deficits with countries because they make stuff that we need here. All right. There are countries that we have surpluses with also. This isn't about like just getting rid of some regulation and put in tariffs and all of a sudden everything's fixed. I haven't seen any of this work. The administration is taking credit today for a pretty substantial drop in oil prices. Oil was down to okay. Oil is up a little. It was below 60, but it's $61 a barrel. And interest rates dipped. They're up a drop today, but they're down quite a bit in the last week. The administration is saying, yes, your policies are working. Yeah, they are bringing down oil and interest rates, but that's because they're putting us on track for a recession. And when recessions happen, you see interest rates go down because demands for bonds go up as a safe haven by investors, and oil goes down because nobody wants to hold oil because they think that if the economy gets weak, that we're going to have reduced oil demand. It's not necessarily a good sign to see uh, oil and interest rates go down. It's nice to see them go down a little bit. When they go down a lot fast, that's not a good sign. That's a disruption, and it's a problem. We'll see what we could do to get out of this. So how do we get out of this? Okay, so first of all, I would be more worried about a recession. If you go into recession, companies scale back, they create operating leverage, they learn to do more with less, meaning less people, and they come out of it stronger. And I don't think a recession that we go into this month or next month will be any different. In the current form of tariffs, I think we go into recession very quickly, and it'll be deep. I just don't know if people understand the depth of this. Think of the eyeglass. Think of this little screws in your eyeglasses. Think of the buttons on your shirt. Think of every little thing is impacted. You know, every shirt you buy, every bag you buy, whatever you do, think about that. Everything will become more expensive. It's not just stuff you buy at Target, it goes everywhere. And then even goods that, excuse me, even goods that are made in America are partially made elsewhere. What I want you to do, besides just give you the blanket advice of don't panic, what I want you to do is take stock of what you have. Take stock of your employment situation. Is your employment secure? Do you need to obtain new skills or new education? Do you need to learn artificial intelligence? Do you need to go to your boss and say, these are the things that I think I should learn to make me better at my job that could help the company? Are you doing that? Or you're just going home and just hoping that you don't get fired or laid off? So what I want you to do with your retirement plans is say, when are you going to be retiring? How many years in advance is it? We don't just turn, you don't just turn your investments from stocks to fixed income and cash and other income generating investments the day you retire or the day after. You start on that glide path a few years in advance. Did you start your glide path? Should you start your glide path? Some of you might be thinking, if it's going to be this bad, then I have to delay retirement. I think the market will be okay, by the way. Now, if you're an individual stock investor, it could take longer. It might be more difficult. Not every stock recovers. If you're That's one way to invest. But if you're a broad-based investor and you're just investing in your 401k and you're diversified, I think you'll be fine. This is an opportunity for you to buy and keep dollar cost averaging into the market. I think you'll be completely fine. But the market might be down from its top, but it's still up a lot in the last couple of years. So you still have opportunities to make changes to rebalance. I think the stock market I wouldn't be afraid to be a buyer if you want to be an investor in buying things on the cheap. I'm not saying the market can't go lower, but what I'm saying, uh, don't wait for the market to bottom before you buy. You don't know what the bottom is. I see a number of strategists come out and saying about 4,500 to 4,900 on the Dow. I'm just looking over here to make sure I'm getting all my numbers right. I mean, on the S&P rather. S&P, excuse me. The S&P went out today, S&P 500 at 5,060. So between 4,500, okay, another 10% down, and 4,800, that's what some are saying. Now, we could get down to that level, and then the same strategist could say, we're going down to 3,500. I don't know. I know that a lot of stocks I follow, I still think have good earnings power. These companies still can't be replicated by anyone else. They are making products that we need, and when those go down a lot, when those go down a lot, I'll be a buyer, and I'll buy a little. And if they go down a little bit more, I could buy a little bit more. And if they go up, they could go up a little bit. I don't think anything from here goes up in a straight line. I don't think we're going back to old highs like any time immediately. It's going to be bottoming is a process, not an event. So I think you want to take control and you've raised some cash. You could start putting some of that money back into the market now. I'm not saying buy a stock that's down a lot from its year high. Well, the stock is 30% off its high. Well, it was obviously too high to begin with. But if I think that it's a really good company with a really good product or service that the world needs, I'll take it. I'll take some. And that's what I'm doing. There's ways to do that. You could use funds, ETFs, etc. What I want you to do is make sure you have your other bases covered. Are the beneficiary designations up to date on your accounts? Should you turn your taxable brokerage account into a transfer on death account? Your joint account could also be a transfer on death account. Should you get a new estate plan, updated estate plan, or will? Should you put your house in the name of a revocable trust? Okay. These are the things, the financially savvy things that I want you to do. Looking at the stock market and talking about how bad the market is and how bad the tariffs are going to be is not going to make you any money. So another thing you could do, you have money in an IRA, the IRA is down, convert all of it or part of it into a Roth IRA. You're converting less money, but the same amount of shares. So this could be a very good time to do that. What else could you do? Tax loss harvesting. You're down in one heavy duty industrial company, sell it and buy another industrial company. Now you've got the tax loss and you're in a similar company. So when you recover, you'll still be in the same sector. Tax loss harvesting is a very big deal. And I think it's something that you could take advantage of. You don't just have to do that in the last week of December every year. You could do it now. Look for some blind spots. Small cap stocks have really taken it on the chin. There could be opportunities in the small cap sector. And I know American investors are still underrepresented in small cap, or at least I could say they don't have large allocations to small cap. Same with foreign stocks. There's lots of things that you could do to give yourself a sense of control over your portfolio, over your money, over your job, and those are the things. You don't have to do them all, but I would just pick one of those and do it. And I think that is what will give you the energy that you need to stay focused and not make hasty last minute decisions to just sell everything or just buy everything. And please stop with the all in or all out kind of strategies. Buying is a gradual process, selling is a gradual process. And when you learn how wonderful it is to be a gradualist like myself, you will feel a lot better about your investments and your overall financial picture. And it's a great way to take control. All right. So that's about it. We'll be talking more about tariffs in the coming days. If you have any questions, ask me in the comments. If you just watch us in the replay as opposed to the live, I'll see it. Ask me questions in the comments. Give us a thumbs up. I see a bunch of people are watching, and if you give one of these, I could actually see your name, and that would be really, really cool. Okay, so I have to get going in 3, 2, 1. All right, guys. Have a good night. I'll be back tomorrow. Thanks.